Hi, this is Louis Yanis with Wealthnet Investments. I want to tell you a little story about when I was doing my MBA. There was a time when we were doing a case study, and the case study involved a bank robbery. And what the professor said for us to do was, each one of you individually in the class, I want you to look at this robbery scene and look at all the details and read it thoroughly as you can, and then we're going to ask you a series of questions about what you think happened with that. And each one of you have to answer them individually and put it down on paper. So each one of us analyzed the case, scrubbing the case, looking at it very in detail, and then answered some questions. And then what we did was we regrouped, and he broke us down into separate groups. And then in those groups, I think we had like 5 or so people in each group. We went again and we looked at the case, and we all collaborated in the group, putting together our collective wisdom, and then we actually tried to analyze what happened. And when we actually got the details out of that, in the end, what we found out was when we were working as a group, all putting our inputs in, all looking at the pluses and minuses, we each saw something differently. And when we were able to do that and collaborate and talk about it, we actually had a closer scenario to what actually happened. So the moral of that story was that the collective wisdom of individuals who are all thinking about a particular topic can give you a better outcome than the smartest people. In fact, each group did better than any single individual did. So even the smartest of the class didn't do as good as the groups. I bring that up because I want to talk a little bit about the concept of collective wisdom. In the last week, we've had quite a few of our stocks have some pretty nice moves. And a lot of this I attribute to technical analysis, because technical analysis allows us to analyze the collective wisdom, which can be seen in the price of an investment. So if you think about it, we've got thousands and thousands and thousands of smart people who are looking at individual investments, and all of their buy and sell decisions are incorporated in that single thing that is objective, which is price. So in our dynamic growth process, we have a strategy that we manage. It's like a sub account, sleeve that we manage. We basically use those types of techniques of technical analysis in addition to fundamental analysis to help us figure out which companies are poised to make some moves. And so we had a little bit of a correction, if you might remember, not too long ago. In fact, let me just pull up a chart of the S&P 500 here, SPY. We'll just look at the ETF. So you can see we had a peak here that, let's see, when did that peak occur? That peak occurred right at, January 22nd or so. And then we came down, a nice little down move. And when that happened, we had quite a few of our stocks actually sell that were stocks that were no longer meeting our risk parameters. But we had a whole bunch of stocks that lined up that said these stocks could potentially be winners. And I'll show you some examples of them. And so what we did was, while the market was down, we had some orders that we placed in. We basically have algorithms that we look at where we don't actually place the orders in the market. We have them hidden, and then when the price action acts in a way that we're looking for, then we have the confirmation and we enter. And basically what we're doing is, you can kind of look at it as a buy stop, where we're saying if this moves up again and we start breaking into new high ground again, then those particular stocks are likely to make a move. We already looked at the fundamentals of these stocks. So we had a bunch of them line up. And lo and behold, some of them lined up, and they all had a bunch of them hit buy points pretty quickly. I would say over several days, most of them entered. And one of them was a company called T-Mobile, which you may have heard had a merger. So we actually bought it here. You could see it was at 80.93, so $80.93. We were looking to enter. We entered in, and then the stock took a big run up. I mean, this is a monthly chart we're looking at here. If you look at the daily chart, you can see what happened here. So we came into this order. We actually got filled in right here in the morning, and then boom, and then 3 trading days later, actually there was a merger with Sprint, right, announced, and we had, I want to say, a 12% up day. So there was some collective wisdom that was happening in the market prior to this actual event. And technical analysis can give you some clues because you could see this stealth buying that was occurring. And that's what we saw. We had a basing pattern. It was classic. We had some accumulation started to happen where buyers started to step in. Smart buyers were stepping in. Volume was contracting, but most of it was buying volume. So quiet accumulation is something we really like. It kind of faltered a little bit on the right-hand side, and we were saying, okay, the fundamentals were there. And there was a discussion that maybe this would happen. And of course, we had no foreknowledge other than the fact that we knew that the industry had some great dynamics that were happening, and we saw the technicals work. And that's kind of an idea of the collective wisdom. That another example would be not so dramatic, but a company called Penn National Gaming. So the gaming industry had already had a breakout in price. And, the gaming is a little bit less economic sensitive. People still like to gamble, basically. And so we had the fundamentals were there, and we had some orders teed up, and then we entered the stock between $30.92, $31.99, and then the stock took a nice run up here. Now, if you look at this line underneath here, this blue line, you could see that is the relative strength line. When it's rising, it's showing that the stock is outperforming the market. And you can see the stock, really has been outperforming. If we go back, obviously, T-Mobile was outperforming as well. That goes without saying. But these are the kinds of things where the collective wisdom was coming into play. It's not just about the fundamentals, because you can have fundamentals without, I always say this, fundamentals without the marketplace recognize them are really useless. In order for us to make money, we need the marketplace to recognize this. Another example would be ServiceNow. And this is one that we've owned for quite a while. And, it had a series of moves. And with this last move, had another big pop. And one that lined up that last week, though, Mid-American, MAA, Mid-American Apartment Community. This is another example you can see here at 137.84. We're looking to enter. It enters in, and it's just before it starts entering that new move. And that's the kind of thing that we're looking for the technicals to help us with. It's really to help us identify a catalyst. You have to do your homework about the companies, but the technicals can really help you with the catalyst. Collective wisdom, again, Mid-American Apartment is a real estate company involved. Our thought was rates come down. That's probably going to be good. Home prices get too high. People still want to rent apartments, and it's more stable than other industries if we have an economic slowdown. So these are the kinds of things that I wanted to talk about. When I talk to my colleagues who are pure fundamentalists, I'm a little bit baffled that they don't see the value in actually looking at the technicals. It just makes a lot of sense. Here's another example: Motorola Solutions, flat basing, had an order. It was below 180.30. We had an order to jump in at 180.30. It pops through, and then we have a nice little run, and it's starting to outperform the market. So these are the kinds of things that we look for. In addition to, I think, having an understanding about that is really, really important, and managing risk obviously is really important. One thing I wanted to also kind of talk about a little bit today is gold. A lot of people have been looking at gold, and I've talked about gold, and we bought gold. We own gold for many clients, and we've had a nice run, and gold's kind of just basing right now, just kind of going sideways. But if we have any kind of uprising in risk, we're likely to see gold go higher. So one of the things we want to keep an eye on is a continuation in the gold position going higher. Another thing that's to look at from the risk off standpoint would be the long bond. Here's a chart of the Vanguard Long-Term Bond Index. It's an exchange-traded fund. We have some position there too. So there, we've started to see a solid movement, and now we're kind of pausing. So as we've had this little move up in the market, some of these more defensive issues have slowed down, but they're still in play. So we want to look at those. Another company that kind of lined up was Vertex Pharmaceutical. This, classic example, popped through, starting to move higher, making nice returns, outperforming the market. So that's the moral of the story. If you have the collective wisdom of looking at the price, don't ignore it. And many of my colleagues don't look at the technicals, and maybe we should. And but anyhow, and for clients who want to know and have a better understanding about what we're doing for them, so it's sometimes I like to just give a little bit of a heads up. Maybe you've seen some of these stocks in your portfolio: T-Mobile, Penn National Gaming, ServiceNow, Mid-America Apartments, Motorola, Gold, Long Bond. So these are the kinds of things. Now, since we manage a wide variety of types of portfolios for clients who are in various situations, so not everybody is going to own these types of holdings. But it is incorporated in particular in our dynamic growth strategy. In our fundamental core strategy, it's more high quality, good valuation. Before I close out, I want to just make one last point. And one of the things that I always hear people say is that, hey, I don't want to buy this because the valuation is horrible, way overpriced, or hey, this is a great buy because the valuation is amazing, we should buy it right now. The problem with that way of thinking is that valuation alone is a horrible timing tool. It is a very blunt instrument, and that's where technicals can help. So if you have an idea about what you're looking for, look for the catalyst in the price, and that will help you with your timing, and it'll also keep you out of trouble where you could be wrong and move the other way. And you can also use technical analysis as a risk management tool, which is really, really important. All right, well, that's all for now. Louis Llanes with Wealthnet Investments. Hope you're having a great time here. It's been snowing a lot here in Colorado. Wherever you are, hope you're having a great time and day, and we'll talk to you next time. Thank you.